Good morning. Hopefully you can all hear me. Let me get all this stuff and try to get things rearranged here real quick. I don't know what's going on. Thing is just being crazy. I'm late. Holy cow, it is 2 minutes after, huh? I've been fighting this for the last 3 minutes trying to get this stuff. I don't know what's going on. The weird stuff for getting things rearranged and yeah, good afternoon, I guess, huh? That's right. I always forget. I get lost in my own little world sometimes. I'm the only one that's here. It's only 9 a.m. out here on the left coast, west coast, whatever you want to call it. All right. I don't know where Trixie's at. I kind of hope she stays away for the hour. So I'm not sure. She hasn't been bugging me this morning. So she was here when I first got up and started working, and then she bugged out. So, which is good. I'm trying to get a lot of stuff done this morning, so I was focused. I just had to stay focused, and she distracts me a lot. So, and as some of you know, I'm a little bit ADD anyway, so it doesn't help to have distractions. So anyway, well, welcome out to Trading Coaches Playbook. Appreciate that, Jennifer. You too. Let's get right to it. I am not a registered broker dealer investment advisor. I'm not going to give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume it is a paper trade or practice trade. For regulatory reasons, we do not discuss funded trading here. Yeah, that's what I figured, Alyssa. All right. I don't know why it does that. It's goofy. Oh, well, I think it's gone now, right? Leave it that way. All right. So here's what's coming up. Yeah, see, I'm still having coffee out here. It's still early. Well, it's all relative. Premium online workshops coming up. Monster Market Movers, December 12th. Inner Circle is the 16th, 23rd, and 19th. Fibonacci Trading Mastery, December 16th. Mastermind Group, the 17th. Okay. I was like, wait a minute. Those are same thing, different times. Okay. 16th, different times. The Mastermind Group is 17th. And Trading You is January 2nd. 8 Eastern time. Then the free online workshops, Power Hour, then Trading Coaches Playbook. This one. I'm not sharing my screen yet. Really? You guys can't see my screen? It's showing on my end that it's showing. Should be in the upcoming events. Okay, that's weird because it said I have the little thing that says you're a screen share and it shows me the upcoming events. So y'all got upcoming events? You got a trip? Okay, good. Yeah, I don't know where that other thing came from. So good. Good, good, good. Freaked me out for a second. Like, I already having some technical difficulties. I don't need any more. And then awesome. Thanks, Alan. Power option plays Monday and Thursday. Cover call explore with Trip on Thursday, and E-mini think tank with Brandon Monday, Wednesday, and Thursday. So that is what's up and coming. And there's all the social media platforms you can find us on. And yours truly. There's what I have, Patterns in a Flash, if you're not familiar. I think I see a lot of names here that have had it. I know that. So it's all about technical analysis. So if you want to upgrade your technical analysis skill, that's a great tool to get. Weekly Whispers, if you want to see the candidates that I'm looking at trading every week. That's essentially what I do there. I was already doing my research anyway. Every Thursday, I do my research. I look for patterns, start with 300 to 400 stocks, filter it down basically to usually about 20 or 30. And those are the ones I watch for the week. They're the best of the best patterns that I found. And I create trading plans. And I basically just get on and show you the screen and show you we look at the news, what news is coming up that could affect our trades. That's the first thing I start and look at the big picture, look at the markets overall, macroeconomic views, anything, my opinion about what I think's coming up, what might be happening, and then review last week's trades, and then we look at the upcoming candidates. So that's what Weekly Whispers is. So I usually do about 45 minutes, give or take a little bit, and then in the middle of the week on Tuesday, I record basically an update for what's going on that week. So that's usually 15 to 30 minutes. So, and you get that Wednesday. So you get the Weekly Whispers on Friday. I record it Thursday night usually. Sometimes Friday morning if I get busy Thursday and get too tired. But it usually goes up Friday at some point or Saturday morning if we're a little behind on something. But and then small accounts, big returns. Hopefully somebody will pick that up. That's going for $1 right now, I think still, right? I don't know how long that special is, but that's when you can pick up for just $1 right now. And if you got that email, I know I got it. There's I think 4 different classes you can get for just $1. So if you want that, you can go grab that for just $1. I think it's normally is it $1.99, $1.49, $2.99, $2.49? I don't remember what they are, but I know I don't get involved in the back end stuff. I try to stay in my lane. I just trade and I coach. That's what I like doing. So I don't want to. I don't like dealing with all that stuff. I pass it off to the support team because they're awesome and they'll take care of you. So if there's ever a problem, get a hold of them. All right, you ready to have a little fun? Extinguish definitive thinking. How many of you have ever done this? I thought I shut that off. You had this thought, or you even say it. Sometimes we verbalize it, right? The stock's going to bounce. It's going to go up. I had this question just recently. At what price point will you admit you were wrong? I literally was asked that question. I'm like, okay. I should have gotten it there. Okay. If only I would have gotten out. I could have made a fortune if I didn't know. One of the important things to master in trading, I think the most important thing to master in trading is mindset. That's the differentiator between amateurs and pros. Those that make it and those that don't. It's mindset. You can learn everything there is to learn about technical analysis and fundamental analysis and options trading, and you can know every option strategy under the sun. But that doesn't automatically translate into a trader, professional trader, I guess I should say. I don't know, however you want to call it, but making a living at trading is a different ballgame than knowing the information. How many analysts do you see sitting there behind the TV screen analyzing, watching the football game? There's 4 or 5 analysts, and there's millions of analysts sitting at their home, right, watching the game, saying, "What, yo, you should have done this, you should have done that, you should have got." It's a whole different ballgame when you're on the field, right? The stock's going to bounce. This is one that takes me back 15, 18 years. I'll never forget. I don't remember what city we were in, but I can see the room in my mind. But I had this gentleman come up to me. We were doing a workshop, and he says, "Hey, tell me what you think about this stock." So we go over to his laptop, and he pulls up the chart and looks at it. And I said, "Well, just out of curiosity, what's your opinion on it?" "Well, it's this and this and this. There's support right here, so it's going to bounce right there." "It's going to bounce?" "Well, yeah, look, there's a support right there. It's going to bounce right there because there's a support." "Okay, so you really think it's going to bounce there?" "Well, yeah, it's there's a support right there, and then look at how strong it is. It's a strong support." I go, "Okay, good. You know with certainty if it's going to bounce there?" He started getting a little cranky because I kept asking, like 3 or 4 or 5 times. I kept saying, "You know it's going to bounce there, huh?" "Well, yeah." And that's when I asked. I said, "You're 100% certain that it's going to bounce there?" "Well, no, we can never know with 100% certainty." "Well, 4 or 5 times you just said it's going to bounce. You know it's going to bounce." And I know it's a subtle little twist, but that little tiny difference between I know it's going to bounce or it's going to bounce or it's going to do this mentally cements it into your mind that you're right. And even though, like I said, it's subtle, it's important to change the way we think, the words we use to make sure that we're not getting ourselves stuck in that box that says, I know I'm right. It's going to do this because I drew a line there. It has to bounce. Do you think that The hundreds or thousands or millions of people that are trading that stock, do you think they care about your line? No, the market doesn't care. Market could care less what you think. It's a big place, lots of people involved. But sometimes it's just that little tweak in your mind of and using different words so that you don't stick yourself, so you don't trap yourself into this place where you can't get out of it. It's easy to do that. I did it for a long time. It took me a long time to figure out not to think definitively. I don't care what my opinion, my thoughts. That's why I tell people don't listen to me. Get the weekly whispers, but do what you think. Analyze the charts on your own and figure out, come up with your opinion. Just because I think it's going to do something doesn't mean it is. It's just my opinion. It's just what I think. So listen to people, listen to others' opinions, but formulate your own analysis, formulate your own thought process of what you think is going to happen next, and base your trades on your information, not somebody else's. I mean, take the information in, but the ultimate decision is yours. The ultimate opinion has to be yours. And sometimes I hear others' opinion, like, yeah, that makes sense. I agree with that. Others is like, that guy's nuts. The little guy on TV, Kramer, just screams, oh, he says something, do the opposite, right? Just was watching him the other day when Trump was ringing the bell yesterday. I was watching. He went down and interviewed him. It was interesting. I wonder if they had the camera view from the way it is because he's really short. I guess what I've been told, he's 5'4" or 5'6". And of course, Trump's really tall, so they had this camera view that he didn't look quite as short as he really is. But it was kind of funny because you see Ivanka, whatever his daughter's name. His daughter was standing next to him, and she just towers over him. It's kind of funny. Anyway, things I find amusing. But it's important not to pigeonhole yourself. In other words, get yourself stuck in that spot where you think you're right. It's like the middle one there. At what price point will you admit you were wrong? This one I got into a back and forth debate about Bitcoin. And I'm not a big believer in Bitcoin, but this guy is. And I said, well, first of all, what does it do? And maybe at some point there will be some utility to it, but it really doesn't meet the definition of a currency. It doesn't meet the definition of an asset. People could call it an asset. How's it an asset? It doesn't do anything. Gold's an asset because you can do something with it. You can make jewelry out of it. It's conductive. You can use it in products or services. Right? Land is an asset. You can build a house. You can farm. You can make food. I mean, if it doesn't go to the three basic needs of humanity, food, clothing, and shelter, if it can't fit into one of those, then it's not really much of anything, right? It's just, I mean, it's a stretch to call it a currency, I think, but that's my opinion. And so we're going back and forth on this thing. I'm like, and he very arrogantly is basically speaking and saying everything he's saying is that he's right, I'm wrong, and it's been around for 15 years. Well, how long did Bernie Madoff get away with his scam? 20 years? Sometimes it takes a long time for people to figure out reality, right? So 15 years, like, woo, gold's been around for thousands. Actually, probably since the beginning of the earth, whenever that was. As does silver and every other precious metal that we use. So I see no utility whatsoever for Bitcoin. That's why I don't believe in it. It's just a speculative, it's not even an asset. It doesn't do anything. It doesn't produce a profit. It doesn't generate goods or services. It literally does nothing. It's a speculative, I don't even know what to call it. But anyway, I called him out for his arrogance as tactfully as I could. It was like, dude, why are you so arrogant? Why can't you admit? I've admitted that I might be wrong. Maybe I am wrong, and this thing goes to 13 million like Saylor says it will. Maybe in 2050 or whatever he says it is going to be worth $13 million a coin. He might be right. I might be wrong. I've been wrong so far. I looked at it in 2012. It was $300. I could have bought a bunch of it. But I didn't because I didn't believe in it then. I didn't believe in it at $300. I don't believe it at 100,000. What is it now? So 101,000. But he literally was dead set. And the last thing that he posted before I responded to this stupid question, and then he blocked me or unfriended me, whatever, which is like, sweet. At what price point will you admit you were wrong? He's asking me to admit that I'm wrong when it hits a certain price point. Yet he has yet to, in this whole conversation, which we've actually gone back and forth for months about it, and he finally unfriended me, blocked me, or whatever he did. Uh, he never once did he admit that he might be wrong. Never once did he come back and say, maybe I am wrong and this thing will go to zero. Not once did he do that. But I constantly said, I might be wrong. But that's because I've got 25 years of experience in the market of getting my teeth kicked in when I always thought I was right. And then it's like, nope, you're not right this time, dummy. Right? So it's one of those things that it's, you really don't know what's going to happen. And the woulda, shoulda, coulda thing at the end there, that's a deadly syndrome. And honestly, even after 25 years, I still fight this. It's something that really, I don't think it's ever going to go away. If it hasn't gone away in 25 years, it's not going to go away. I have thoughts every morning like, oh, I should have done this. I should have done that. Yesterday, I had 3 trades go against me. Like, oh, I should have stopped fighting the trend, trying to catch a falling knife. Like, there's a support right here. That's part of the reason for that example, because just yesterday, I'm doing it myself. I'm like, I think it's going to bounce here. I mean, I managed my risk just fine. I stopped out. I followed all my rules and stuff, but I kept thinking it was going to bounce there, and oh, there's a new support there. It's going to bounce there, and they weren't bad trades. I just was fighting the trend. The trades were fine. But then after the trades, and I got beat up pretty good, it was not a good day. I'm like, oh, I should have stopped after the second one. I should have done this. I should have done that. And there's nothing wrong with going back and reviewing and looking and saying, I should have done it. That's how we learn, right? You do something that you shouldn't have done, you learn from your mistake. But there's where there's a fine line too, is did you make a mistake or not? And that's actually that's a simple question that you should get in the habit of asking yourself when you go back and look at a trade and say, I should have done this, I should have done this. Should you have? Because not every trade is bad. And that's one thing I deal with in patterns and flash is how do you define a good trade? Because losing money doesn't mean that it's a bad trade. Most people say a good trade is when I make money, bad trade is when I lose money. And that's a bunch of hocus pocus. Because what if you find a perfect pattern, all the parts and pieces are exactly what you want, you set up a good trading plan, you pull the trigger on the entry point, and you get stopped out and you lose money. Is that a bad trade? No. You did your analysis, you created a plan, you followed your plan, and it didn't work out the way you thought it would. That's not a bad trade. That's a good trade. You had a plan, you stuck to it. If you can answer that question, did you have a plan? Yes. Did you stick to it? Yes. That's a good trade. The end result doesn't mean anything. Because if you have a good plan, if you utilize your risk reward properly, and you have a good plan, then long term, you're going to be all right. So, first of all, redefine what a trade is, what a good trade is, and what a bad trade is. And then when you get to that place, well, I should have done this. I should have done that. Step back, take a step back and ask yourself, did I make a mistake on this trade or did I follow my plan? Did I follow my plan to the T or did I deviate? And if you followed your plan to the T, it was a good trade. Regardless of the outcome, it was a good trade. Now, if you didn't follow your plan, you did something different, you deviated and you did this and you did that, you go back and say, okay, did I make a mistake? Okay, if you made a mistake, if you did something that you shouldn't have done, that's where you correct, right? You learn from the mistake and then you correct it after another 15 attempts of doing it wrong, right? Because that's what we all do. Like, oh, that didn't work. Let's go do it again. So, anyway. Yeah, you know what's funny, Jen? I met a kid yesterday. He's 25 years old. We met at a coffee shop, just talking other business and stuff. And I asked him about Bitcoin. He goes, nah, I don't believe in that crap. I'm like, dude, you're 25. I thought all you kids believed in that stuff. He goes, nah. And he's a construction guy. So, uh, yeah, it's interesting. There's a lot of young people that don't believe in it. That's one reason I don't think. I mean, it's what, 2% adoption as far as population goes. So, uh, yeah, it's just, I don't see, like I said, there's no utility to it. It doesn't solve when you really get down to anything. When you get down to assets, if you really break it down and go to the core, food, clothing, and shelter. If it doesn't fulfill one of those needs, you think about everything we have. You have a house, right? Everything in that house was a commodity that needed to be mined or logged or whatever it is, and then delivered to your location, right? But the land's a commodity. A house actually depreciates because it wears out over time. The land itself appreciates because it's getting more and more scarce because there's more and more people, or at least there used to be, depending on where you're at, right? China, the population growth is slowing. Everywhere it is actually, except for where is it not? There's not many places that aren't. People aren't having kids like they used to, right? The population growth is slowing down, which is not good economically. But precious metals, gold, silver, copper, all that stuff, it all has an actual use. There's utility. You know, how much copper there is in your house. You know, how much copper it takes to build an EV. A lot. Copper, the electric grid. That's one reason. I mean, the amount of copper it takes to build out the electric grid. That's why we can't go electric. I heard out in this town that's about 30 minutes away from me. Apparently, they have three guys on one street all have Teslas. Well, at like 5 or 5:30, the power blew out because the third guy got home, plugged in his Tesla, and it literally blew the entire transfer station down the street. The whole neighborhood was out of power because it couldn't handle three Teslas. It was pulling too much power from the system. And and most of what generate or what conducts that is copper, from what I understand. I don't know it that well, but so until the electric grid, all this electricity, it's not possible at this point. That's why I'm not a huge big fan of the EV thing because the grid's not there. And that's one reason nuclear is coming back into the phrase because people are like, oh, we need more power. Plus all the AI, the big data centers that are being built, they take tremendous amounts of power. That's why Amazon and Gates have bought Micro. I don't know if it's Gates directly, but it's Microsoft, I think, are invested in nuclear energy because they need it to run their technology. So let me get back to the questions. Oh, yeah, Brenda. There's a lot of that stuff out there. Um, no, I've never heard of Blake Gordon. I'm going to guess nobody else in here has either. Don't know who that is. Heading a startup. Yeah, there's millions of startups, but um, and that's the other thing I'm not a fan of all the crypto stuff is that that's the thing. Anybody, I mean, I can start a crypto. Let's call it a whisper coin. I mean, pattern whisper coin, whatever. Anybody can start a coin. So how do you prevent that? And that's the thing. I think I don't know what they're going to do as far as regulation. I hope they leave it unregulated, but at the same time, how do you keep people? Well, people have to do their own due diligence. In the old days, there was no banking regulation, there was no FDIC, none of that stuff, right? So when you went to a bank, what did you do? You used the local bank and you went and talked to them and you made sure they had a solid balance sheet so they wouldn't go under, so that your money was safe. You didn't have some government agency there protecting you. That's I think we've gotten too far away from wanting other people to protect us and be responsible for our bad decisions instead of owning it. Do your own research, do your own due diligence. Whoever's talking about this stuff, it's like I just say, you know what, do your own research. And you know what, if you can afford the risk, go for it. But if Bitcoin goes to zero at some point, there's gonna be a lot of people that are gonna lose everything they have because they're foolish enough to bet everything they have on one. It's happened throughout history. People always do because some people are just, can I say dumb? Sorry. Just just call a spade a spade. It makes no sense whatsoever to take everything you have and dump it into one thing. Unless, I mean, if it pays off, yeah. I mean, to dump it into a speculative asset. I mean, a lot of people put everything they have into a business, but that's, something that generates something at the end of the day. And yeah, a lot of people put a lot of money into Bitcoin have made out beautifully. But what happens for the people that are buying it right now at 100,000? If it goes to zero, they're losing $100,000 a coin. They're losing everything they have. Yeah, exactly, Jennifer. Africa, that's what I was thinking too, Trip, as far as population growth is only in Africa. So you buy Italy, buy a house for $1 in Italy? Where? You can buy my course for $1. Why would you buy a house? Yeah, how do you dispose of the old batteries too? That's what a lot of people are bringing up. Yeah, I mean, people are people. Human nature doesn't change. You can go back to history and look at stories of stuff that happened, 100 years ago, 200 years ago, thousands of years ago. Go back to 2024 years. It's blasphemy. We're gonna kill you. It's just insanity. So yeah, like the 1930s. Yeah, exactly. It's hard to say. I mean, who knows? Maybe, if Trump comes in and puts in the right policies, which it sounds like he may, for economics at least, we might get a roaring 20s type of thing, which is what they had. I mean, I don't know how many of you know this, but there was a depression a decade before the Great Depression. There was a depression I think it was the late teens, if I remember right. It's been a long time since I watched that documentary, but it stuck with me because a depression is 6 quarters of negative growth, right? That's the technical definition. They tried to redefine it here a couple of years ago, a recession. But there was a depression, I think, in the late teens. It might have been early 20s. So they had 6 quarters of negative growth. And then I think it was Coolidge who came in. He cut government spending in half. He cut taxes in half. I don't think they didn't have a whole lot of regulation then. There wasn't much to cut with that. And that's where the roaring 20s came from. Because people had tons of money because their taxes were cut in half. They had all this money that they used to be giving to the government. Now it's in their pocket. Now they're spending it. And that created a massive boom. That's where the roaring 20s came from. In fact, but that's the thing. It got so hot, like it did in the late 20s, obviously. It got so hot that eventually it crashed because people were speculating and making stupid investments. And really the big thing that caused the stock market crash, this is the massive piece to it, was that the margin requirements back then were 10%. 10%, not 50. Today it's 50, right? You put $10,000 into an account, you can buy $20,000 worth of stock. The broker will loan you half of the money. But if it moves against you, they're going to unload your position very quickly, which they did back then too. But the margin was 10. Back then, you put $10,000 into an account, you had $100,000 of buying power. That's a 10-to-1 leverage, right? Well, you buy $100 stock, you put the whole 10,000 into $100 stock. If it drops 10%, it drops 10 points. Guess what happens? All your capital's gone. Now you're on the broker's money. A 10% retracement is not much at all. That's what caused the massive crash, is you had this just downward spiral of margin call after margin call after margin call because people were so highly leveraged with only a 10% margin that it created this massive cascade of margin calls. So will we have a crash like we did then? Probably not because of that. And there's all kinds of mechanisms in place to stop the market from crashing now. So if we do have a big crash like that, it will most likely take longer because of those stop gaps that are in place. So yeah, but that's part of what caused. So you had the depression, and then you had the roaring 20s, which again created tremendous amounts of abundance. People had tons of cash, and they were speculating and throwing it at everything. Anything that moved, they were putting money into. Just like the tulip bulb thing from the 1600s, I think it was. Tulip bulbs were like $1,000 a bulb. I mean, they adjusted that for inflation. But today, whenever the story was told, it was, I don't know, I've read it a few times. There's YouTube. If you want to see it, go to YouTube and just put in tulip bulb craze. And you'll find there's several videos about it. And they're only a few minutes long. But it's interesting because they're crazy. But people speculate. And when people are flush with cash and they have a lot, they speculate on junk, like a banana with duct tape on a piece of board. $6 million or whatever it was. That's a clue right there that tells me that things are a little too fluffy. However you want to put it, right? When somebody pays that much money for a stupid piece of art, but people said it was crazy, the guy that bought it for $500,000, and now he's a genius. And I agree, he is. The odds are that the person that bought it from him is not, and they'll probably lose their shirt, but who knows? So, all right, bunch of comments on that. I lit people up. Just wait for the next slide. Right? Policies for who? No, for everybody, Brenda. Go back to Trump's first term. Actually, the rich have gotten richer under Biden. The wealth gap has gotten wider, significantly wider under Biden than it was under Trump. It actually was shrinking under Trump. The people at the lower end of the economic ladder were growing at a faster pace. Their wealth was than the upper part was under Trump's policies. So yeah, when you reduce taxes, you give the people at the lower end of the spectrum and you give them more freedom and more money in their pockets. They have now more ability to increase and make their lifestyle better. That's just the way it works. So yeah, I mean, that's just that's the data that is there. So, oh, really, Trip? Interesting. Both recoveries from World War One and two were depressions, or at least depressive. Yeah. Oh, really? People got margin calls on Bitcoin? You could buy Bitcoin on margin? I see. That's a little I know about it. I mean, I watch it just out of curiosity. I don't really care about it, but it's certainly interesting to see it, and it's interesting to debate these people that are gung ho cultists. It had instructions to replace the banana roll of duct tape. What? I didn't hear that. I don't know what that is. Yeah. All right. So, how many of you have one of those? This is why I push back on the definitive thinking thing because none of us know what's going to happen. Nobody knows. I don't care how good your analysis skills are. I don't care how much data you have because one thing that's unpredictable, well, this is what's funny. It's predictable, but it's not. Human emotion is predictable to a degree, but then it gets outside of the norm and it becomes unpredictable. You can look and say that, if a guy's got a rap sheet 45, crimes long and he's in prison for 5 years, the odds are that he comes out, he's probably going to recommit a crime and go back because he's done it before. Right? That's the repetitive pattern that we as humans get into. Just look at yourself every day, right? You look at the cheesy little things that we do every single day. When you brush your teeth, you probably start in the same spot every time. When you put your shoe on, you put your right foot on left or left, other one, right? I mean, we have these little habitual patterns we get into. So to a certain degree, we are consistently repetitive, which creates a pattern, which allows us to say, okay, if this pattern means that this is going to happen again. But when things go off the rails and things aren't calm and normal and status quo, then human emotion becomes unpredictable. It's like I don't know why I've been watching these lately. I get on these little kicks of watching these things, a lot of these high speed chases and stuff on YouTube that are interesting. These idiots. But that's the thing is when a guy's just driving down the street and doesn't think he's in trouble, there's nothing going on. It's just everything's normal. All of a sudden the lights come on, and all of a sudden they take off, and now it's unpredictable. You don't know what he's going to do next because the emotions are running. It's crazy. It's like, ooh, what am I going to do? And so it becomes unpredictable at that point once the heightened emotions take over. And then the subconscious kicks in, and you go back to bad habits typically, right? But here's what I say, and this is just in the last, I don't know, 2, 3, 4 years have I really started to do this in a substantial way, and now I notice that I do it consistently. Find something you can relate trading to because you can relate it to a lot of different things, right? I love playing poker. Some of you might know that. And poker's a skill game. You're not playing against the house. It's not technically gambling. It depends on how you define gambling, right? I know some people say it's gambling because, at least in the old days, you used to go to casinos to play poker. If you're playing blackjack, you're playing slots, you're playing craps or what's the other one, roulette. Those are all playing against the house. And roulette is the worst game in house. That your odds are the worst. Craps, you have negative odds. Blackjack, you have negative odds unless you know what you're doing. If you know when to hit, when to stay, you can get even with the house. If you know how to count cards, you can get ahead of the house. It's not hard. I've done it before. I started playing blackjack in Reno when I was 17. I just didn't take my ID. And then I made the mistake after I was winning of ordering a beer. I was like, that was dumb. Not I was like in the casino illegal, but I was drinking illegally. That's when they came and said, we need your ID, sir. I was like, uh-oh. I was in the middle of splitting aces too. But hey, I ended up winning $20. That was back in 92, 93? $20 was a decent amount then. You could take a whole family to McDonald's for $20 back then. Now you can't even take yourself to McDonald's. Barely. But Yeah, they threw me out. If I wouldn't have ordered the beer, I would have been fine. I don't know what I was thinking, but actually, I didn't start. Yeah, I think I went to a party with my brother when I was 17, and that's when I had a few beers. Anyway, yeah, I was young once too, doing stupid things. But I think an easy way to help you shift your mindset and get it in the right place is to relate it to something, whatever it is you can relate to. All right, poker is something I've played a lot in my life. I played sports when I was a kid. Baseball is one that I always go back to. So if you relate trading results to other areas of life that help, so like the first one there, right? Trade's going against you. You had a fight with your wife. How'd you resolve it? Did you hold on and hope that she admits she's wrong? Right? Yeah. 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 Fat chance of that happening, right, guys? She's not going to admit she's wrong. Or you use a stop and say, "You're right, honey. Yep, you're right." And walk away like whatever, try to hold whatever dignity you have left. Anyway, you know what I'm saying. I'm just having fun here, obviously. But you know, when you have a fight with your wife, you get a little pit in your stomach and you're like, right? Because it's not fun. It's not having a fight with anybody, really. But how do you resolve it though? And that's really where it comes in. And the next one is batter. You know, I go to baseball a lot. Batter steps in the box, ultimately strikes out. Again, go back to the crystal ball thing. Did he have a crystal ball when he stepped up to the plate? Did he know what pitch that pitcher's going to throw? He can't read his mind. Now, do they step back and analyze? Do they look at the pitcher and see what kind of pitcher they are, how they throw things? Do they look at the different pieces of the game? You know, what inning is it? How many outs there are there? What's the score? Where's this? Where's this? And based on that information, they estimate what they think which pitch is coming next, but they never know with certainty until it's released from their hand. Or there's some other clue if they have some other clue. And then they have a split second to make a decision. And trading's not much different. I mean, sometimes you have to make a decision quickly. You don't have a lot of time. You got to either swing the bat or you got to stand there and watch it go by. But when you think about baseball, how hard is it to get a hit? I mean, you take this bat and it's, you know, what are they, 30 ounces? I don't remember what they are, but, you know, it's a big old bat. You got to swing. You got this little tiny ball that's what, 4 inches in diameter, coming at you at 70, 80, 90, 100 miles an hour. You got to make a decision in a split second. You've got to decide whether to swing or not. And then if you do swing, you got to take this bat that's only 4 inches around and hit this 4 inch diameter ball that's coming at you at 80, 90 miles an hour. And you've got to hit it into the field of play. It's not easy. I was never a very good batter. I was a good fielder, but I wasn't a good batter. I was okay, but I wasn't the worst of the team. I was probably middle of the pack, but it's not easy. And trade's not much different. That's one reason I go there. Because when you think about batting, especially, there's the old question of what's the difference between a 290 hitter and a 300 hitter? You know, lifetime batting average. It's a Hall of Fame. And you're literally talking about 1%. In other words, in over one guy's career, they hit the ball, they got to hit 29% of the time. The other guy got to hit it 30% of the time. He goes to the Hall of Fame. Nobody knows who the 29%er is. 1% difference takes you from a nobody to a stardom. And that's how subtle it can be. And it's interesting. There was a thing done on somebody did a study on the Kentucky Derby and how much difference in time there was from first place to second place. And the difference was 10%. However many seconds it was, or fractions of a second, it may have been. But it was 10% difference between first place and second place. That's it. So if you're second place and you can be 10% better, you can tie for first place. If you can be 11% better, you can be in first place. But here's what's funny is the difference between first place and second place prize money, 10 times. A 10% difference gets you 10 times the prize money. Kentucky Derby, I think this was back when they, you know, first place paid $1 million. Second place paid 100,000. But 10% made you 10 times the prize money. And it's same thing in baseball. It's just that little edge. That's why we talk about an edge in trading all the time. You need an edge. You need something that gives you that little bit of an advantage. that gets you that slide, because that slide edge can make all the difference. And then the last example there is poker, which is my go-to. Well, both of them, batting and poker, are the two that I go to often because I played a lot of poker in my life too. And it really is, it's virtually the same. I mean, they're absolute parallels. I can't find any difference because in poker, you sit there. First of all, you have to sit and be patient, right? You're sitting on a table. If it's a full table, it's 10 people. The dealer's throwing cards out. You look at your cards. Oh, those are junk. Throw them away. Just like looking at a chart. I look at a chart. There's no pattern there. Junk. Toss it. I don't want it. Get a pair of aces. Oh, I've got a good pattern. Now I've got a starting hand. Now how do I play it? Once I find the pattern, once I have it in my hands, now what do I do? Same thing with charting. I look through, just like I did last night. I went through 400 charts. I look for a pattern. Flag it, flag it, flag it. There's a pattern, put it into a list. Okay, now what do I do with this pattern? Now how am I going to play that pattern once I have it in my list? And then I create a plan. Right? Poker's the same thing. I got a pair of aces. What do I do? Okay, well, who am I playing with? Where am I at position-wise? That's the first thing. If you're in last position, you get to act last, so you get to see everybody else's action first. So being in late position gives you an advantage. So that's the first question, is what position am I in? Am I first to act or last to act? If I'm last to act, boom. Now I can play more aggressively. If I'm first to act, got to be a little more cautious. Just like a trade. Here's a great head and shoulders. Just like J&J was. And you're like, oh, but then, oh, here's a head and shoulders that's gross. It's ugly. It's not good. But it might work out. Who knows? So now you got to make a decision, right? What am I going to do with this? How am I going to play this? You look around, analyze the situation. Late position, I can play this aggressively. Early position, I'm going to play a little moderately. And then you got to wait to see what everybody else does. People might call you. They might raise you. Hopefully they dump, but who knows, right? You don't know what's coming. And then you have to remember what they did. Because the next round of betting, because then they're going to flip 3 cards, which could improve your hand or could make it worse. Could land somewhere in the middle. You just don't know. And then there's another round of betting. Now you got to wait and see what other people do. If you're in late position, that's great because you get to go last. You get to see what everybody else does. But then you got to remember what they did last time. So you can base your bet on that. There's a whole, just like trading, right? There's a whole slew of things to think about. Oh, that's right. There's the thing. You go, so you get queens, right? This actually happened to me. That's where that that part at the end came from. This was not the last time my dad came up, but the time before. We were sitting there at the final table. He and I were. He got knocked out, and I got a pair of queens, and I didn't have a lot of cash left. I was short stacked, so I didn't have a lot of tournament chips left. And so at some point, you got to decide, okay, I'm going to go all in and see what happens and hope that I get lucky. And a pair of queens, there's like 6 players left. And I'm like, all right, well, let's go for it. This is a good time because you don't get queens very often. So I go all in. The guy next to me goes all in. I'm like, ugh, that might be okay because, I mean, there's only 2 hands that can beat me, kings or aces, right? At this point, before the flop. And I think he and I are the only ones in there, if I remember right. And so he flips over aces. I'm like, ugh, I'm toast. I'm toast. Unless I get a queen. And out comes the flop. And the flop comes out queen, rag, ace. I'm like, ah. So now I've got a set of queens, which is a great hand. But he has a set of aces, which beats me. The only thing that I can win on is a queen. The only thing I can win with is a queen. The next card comes out, junk. We're all in, right? So there's no betting anymore. The next card was just something else. And the last card that came up was a queen. So I had 4. It's the only card in the deck, left in the deck, that could have had me a winner. And it came out. And I'm like, woo! It was pretty awesome. I felt bad for the guy though. Because he was way ahead and he should have won. But I got lucky. And sometimes that's what it takes. And that's really what trading is you go through the steps of skill, right? You look for a pattern, or however it is you find your trades, your candidates. You find a pattern, something that you like, a setup you like, and then you create a plan around that, and then you adjust it as things play out. If it's moving in your favor, what do? You adjust your stops, you do this, maybe you take some profit, you scale in, you scale out, you adjust your risk profile, whatever the case is, you continue to adjust your route, just like in poker. You get a starting hand, and then you play it, and you got to figure out how to play it as it's unfolding, right? So that's one reason that it's I think that's what made me fall in love with trading, and I didn't realize it for years that it's the same as poker because I fell in love with poker at 18. Went down a little Indian casino and started playing. Didn't I lost 20 bucks in like 10 minutes the first time I sat down. I played home games when we were kids, but I'd never played in a casino. I'm like, well, that sucked. I got to figure out how to do this because it was fun, but at the same time, I don't want to lose like that. So I went and bought a book on it and started studying it, and then I ended up playing down there almost every day. My family thought I had a gambling problem at one point, but it's not gambling, right? If you ever watch Rounders, whoops, that's not what I wanted. If you've ever watched Rounders, you know what I'm talking about. If you haven't watched Rounders, go watch it. It's a good movie. I think that's actually that spawned the poker craze that came up. Well, it's died off now, but what, 15 years ago or so, poker was big time crazy. People were all excited about it. So, all right, who wants to look at some charts now? Any questions about any of what I just rambled on about? Some guy's gonna go apologize to their wife. Sorry, honey, you were right. Put in your stop loss. It's never too late, guys. I'm just kidding. I don't have a wife anymore. Maybe that's why. Maybe I wasn't good at using the stop loss. So who knows? I do know actually, but it's neither here nor there. So what do you guys want to look at? Okay, I'm gonna start off. Is Trip still here? Yep. All right. Not even, I shouldn't even ask that question. Yeah, see, this is the part that just has me kind of like, what's going on here? Because I mean, yeah, the economy overall is fairly good, even though I don't think it's as good as the media or the data is playing out. But I mean, I look at this and it's like, okay, I guess it's almost a year ago it was 125, but it's almost doubled in a year. Has IBM's business doubled in a year? That's where I think, I mean, even though I'm not a fundamentalist, I a lot of times ask that question, like, and the other question is, and it's not necessarily that have they doubled in a year, but is their future growth, can it sustain this? Say 5 years from now, how much is it worth? Because I doubt that they're worth fundamentally 230. Because a year ago they were 125, which maybe it was undervalued there. Maybe this is over. Maybe the real value fundamentally is somewhere around 180, 190, 200. But at what point is it too rich? You know what I mean? So I think of it in terms like that. Even though I don't look at the fundamentals, it's like, can it support it? And is this just speculation on future growth? Saying I'm going to buy IPM today and hold it for 5 years and expect that in 5 years it's going to be higher than 230 bucks. And that could be the case. And maybe it is. And maybe that's where this is coming from. But a lot of it just seems like a lot of fluff and a lot of really insane speculation. I mean, if you go look at MSTR, what, 6 months ago it was 50 and it hit 500. It went a tenfold. And you want to talk about, I don't know if that, I don't know if I want to call that a Ponzi scheme, but it certainly is kind of looking like that. I mean, they're selling bonds to do this and they're doing convertible notes. And I mean, he's got all kinds of shenanigans going on. And they might be perfectly legitimate, perfectly legal, but boy, it seems a little shady to me. And that's the crazy thing. A lot of people they'll buy Bitcoin and short MSTR, or they'll short Bitcoin and go long MSTR. They're literally using it as a hedging mechanism. They're hedging it either way. It's kind of wild. I just saw an interview recently with Saylor because it's, even though I think the guy's a little bit of a nut, but at the same time, it's interesting hearing what he has to say. Curious to know what he thinks, and he's explaining this whole thing and how they're doing it in convertible notes. And some people want the they want a stable thing. They don't, because Bitcoin's extremely volatile, super volatile. That's why it could never be a currency. Currencies can't be that volatile. They can be, but they don't survive. So they got to be more stable. Um, and he's projecting out 29% a year for the next 30 years. 29% a year. That's how he gets to 13 million because that's what it's averaged. And I just think that's crazy. I mean, there's not a whole lot of things that grow at 29% a year. Some things have historically, but long term to do that, it's extremely difficult. Anyway, um, so yeah. All right, Trip. Nice double bottom down here. Would have been. If only I could have seen it before. I should have gotten in right there when it broke the midpoint. Right. This is where learning comes in, and it's handy. Right. Nice double bottom. Big old drop down. I'm assuming that's earnings. Nice double bottom breaks the midpoint. That's where you're expecting it to rally, and sure enough, boom, it did it. Played out beautifully. Almost a bearish engulfing pattern there, but not quite. Yeah, I mean, there's not much here that's compelling to me that would say it's time to get in, or I would want to get in here. Where is it right now? See, I think I have it on my list. It's down 80 cents. So it's actually up a little bit from where it is. This is streaming, but it's 15 minutes behind. So it's bounced back a little bit. So we'll probably get a doji. I actually think we probably have a double top in play here, but that's the market itself is sold off. Tech has been selling off pretty heavy this morning. It's stabilized a little bit in the last hour or two, but it gapped up and then sold off. Spiders. All right, good. I'll get both of you in one. This is it's just the SPX, right? Same thing. But Apple, Nvidia, I don't know what's Tesla doing. I have the Mag 7. I have a little list up here just for fun. Oh, I've only got 6. Who am I missing? Meta, Nvidia, Microsoft, Apple, Google, Tesla. Who's missing out of that list? Amazon. I like Toss, but sometimes you do something weird and it deletes it from the list and it irritates me. If you just click sometimes wrong, it deletes it out of there. Tesla's the only one that's up. It's up 10 points. Everything else is down. Meta's down 12, Nvidia. So this is what's driven the markets overall. The SPX doesn't look that bad. But let me show you this. This is one thing I talked about in my in the Weekly Whispers last night. So there's the SPX. There's the NASDAQ. They look very similar, right? They've had a nice rally. They've only slowed down a little bit. But watch this. There's the Dow. 6 days is down. And there's the Russell. It's been down for a couple weeks, dropping. So why the difference? Why? Because generally speaking, in bull markets, you have all 4 of those markets are all going the same direction. Now, we're talking about a week or two of disparity. That's not a big deal. But if it continues like this and the Dow and the Russell continue to fall, the NASDAQ and the spiders don't fall. But the main thing that's holding up the NASDAQ and the spiders are those Mag 7. Because they've all been hot. Apple's been on a crazy run. Tesla's been on a crazy run. Nvidia's actually cooled off a little bit. Well, Google went on a crazy run. So when those 7 stocks go super bullish, or 5 of them do, it skews the look of the overall market because there's such a huge percentage of it. So when you see the NASDAQ and the SPX doing what they're doing, and then the Dow and the Russell doing the opposite, they're going down pretty heavy, something's not right there. But that's the reason that it's hard to see this, because people, the overall market's going up. Well, yeah, that's based on a handful of stocks. I haven't looked at the breadth for a while. And there's a high-low index. There's a whole bunch of breadth indicators, but I can't remember what the one is that I don't look at it very often. It'll tell you how many stocks are making new high. There's a high-low, right? How many are making new highs? How many are making new lows? So that sometimes gives us a good clue as far as how the overall market's doing. But the PE ratios are totally out of whack. I mean, they're like double what the historical average is. So fundamentally, this doesn't make any sense. Technically, the momentum could keep going for a while. It's hard to say. Just don't know. But that's the thing, and you got to be cautious when you only look at one index. That's why intermarket analysis is important, is because you look at the SPX and the NASDAQ, everything's wonderful. You look at the Dow and the Russell on a short term, short term I'm talking right now, not long term. Because long term, they're all fine. Except the Russell tried to make a new high 3 weeks ago, and it did for a time. It was a very short time, like a few minutes or an hour or two. And then it sold back off. Yeah, these indexes are not necessarily indicative of the overall market. So you got to be careful with that. That's all I'm saying. It's just be cautious on what you look at when you're not comparing it to everything. So Micron, we'll do this real quick. I just noticed them down in time. Micron, we really spied Micron and Amazon. There's a little symmetrical triangle going on there. Kind of, there's not really a big one. This thing's just stuck in this range. It's not doing much of anything. I mean, the next major spot is probably even move that up here. The next major point is right about there. There's a little wiggle room in there, but here's the question: if it breaks out of this right here, where's it going? I mean, is it only going up to 108, 110, somewhere in there? It doesn't leave a whole lot of upside. I mean, it's a little bit. You could pick up a few points out of it, maybe. And if that's what you're looking for, then go for it. If it breaks down, it's got a more downside to the downside. You got about 86 to the other low. Of course, you got some right in here. This is where it comes in. This is why I use the dash lines. That's a fairly solid spot right there. A lot of times I'll use these. I've got these on the side here for intermediate support resistance. Those are solid. If something's really weak, I'll put the minor one on there like this. So basically, that just allows me when I go back, I can see what my thought process was when I was originally analyzing it. I put the solid lines where it's a solid support or resistance, and the dash lines based on how much strength I see in it. It's just an opinion. It's my analysis. So I don't see a whole lot there with Micron. I mean, there's nothing too exciting about it. If it gets you excited, then go for it. I mean, Amazon all-time high, so there's no pattern here at all. So for me, there's nothing to do on Amazon at this point. If there's a candlestick pattern that would say, it's probably going to turn over or might turn over, then I might trade it. But right here, do I think it's overextended? Probably. Is there odds of a pullback pretty high? Probably higher than another rally. I mean, ultimately it's 50-50. But when you start analyzing things, you can look at it and say, okay, this thing's run from 200 to 230. That's a 15% run. Odds are it's going to pull back a little bit, probably back to this previous high, which is pretty normal. Right? It goes back to the previous high. Odds after a run like this, the odds of a pullback are higher than a continued rally. But there's other factors too. I mean, sometimes momentum plays into that. Sometimes there's other news that created the move, which means it could keep going. So you can't just definitively say, as our topic today, that this is what's going to happen. So I always lean on the odds. What are the odds of this happening? The odds are after a rally like that, after a 50% rally, you're going to have 2 to 5% pullback. So that's what the odds are, and that's what I'm playing is the odds. What's the NQZ24? I have no idea what that is. Is that a futures? We have the NASDAQ what though? Is it NASDAQ futures? Is it an index? Is it an ETF? That's why it's like, I don't know what that is. NQZ24? It's future. That's what I was thinking because that's what I was estimating. Let's see. NQ, I don't know, what's the Z? Is that December's probably, I'm guessing? There's the E-mini NASDAQ. Yeah, it was the Z24 that threw me off. I was kind of figuring that. Because I've got the NQ up here. I mean, I've got a little list of futures up here. Oh, there it is. The Z, I never noticed the Z24. It's in parentheses on TOS. That's the December expiration that I'm guessing. Okay, yeah, I've got the NQ. Yeah, see, I've got this little box here where I have the futures. See, I've got the futures, I've got Bitcoin, I've got the dollar, I've got gold, I've got oil. Just because I like to look at these once in a while just to get an idea. But yeah, I never noticed that stuff in the parentheses because I don't know what it is. I don't care. It doesn't matter. But yeah, I'm assuming that's what that is uh, December. So it's up 31. Yeah. So the futures are saying that, it's going higher. Well, let's see here. Let me move that. So here's the top chart. There is a 5 minute. The bottom chart is a daily, which is interesting because that's the question: is where did it start? And when you look down at the bottom, because it's all relative, right? Futures start at I don't what time do they start at 5 o'clock? Do they not? I think 4:59 or something like that the day before. So there's the break. Actually, come on, I'm gonna maximize this one. So that line right there in the middle, the dashed vertical line, that's the break of futures. So futures closed yesterday at 150. Right? It closes about 50 minutes after the market closes at 2163. It gapped up this morning and rallied big time up into 2190, and it's tanked. And you can see the open of the market is, well, 630. Where did it go? So it's jumping all over the place. So yeah, the overall NASDAQ opened, the futures were higher. It opened higher, but then it sold off. But the futures itself, since they opened yesterday at, should show right there, yeah, 1500. So that's 3 o'clock West Coast time. So they opened here. The futures are down. That makes sense, right? So the futures are down on the day, but the NASDAQ, well, the NASDAQ is too. Or it's up on the day, I should say. I got that backwards. It's up from where it closed yesterday. Well, you can see on the daily here too, right? Because we had a down day yesterday. So that makes sense. Yeah, well, that's exactly why. Let me show it on the daily. Maybe it'll make more sense that way. So this is the futures, right? This is the NQ. This is the futures of the NASDAQ. So the big candle yesterday, this is live. This is literally streaming right now. So that candle we have right there is today. This is yesterday's candle. The NASDAQ closed right here. The NASDAQ closed right there. So that's the closing price from yesterday. So today's price, as you can see right up here, it's up 42 based on yesterday's close. So the futures gapped up, rallied way up here to 21,908, and then have sold off. And I mean, right now it's basically a little spinning top because the NASDAQ itself didn't open until 6:30 today. And if we go, so this makes a good point of relativity. It's all from where you start with. That's why I can't stand all these Bitcoin nerds that are like, oh, well, it's up this much. Well, yeah, but if you bought it at 70,000 3 years ago, you're only up 50%. You're not up 4 million% like some people are. If you didn't buy it in the beginning, what if you bought it at 70 grand? So it's all relative. It's all based on the starting point. Where does I need to clear everything, clear drawings. There we go. So that is the futures, right? I don't know if I have that on. Yeah, there it is. There's a NASDAQ composite. Dang it, that's not it. Oh, I see. So there's a picture of the NASDAQ composite, which you can see yesterday. It gapped down, right? It closed right there. Come on. So this is the close of the NASDAQ composite, which is only open from 9:30 to 4. It gapped up this morning, but it sold off so much. There's the close of yesterday. So it is down 45 points. Because this one started at 6:30 or 9:30 this morning. The future started at 6 o'clock yesterday. So it's all based on starting points. It's all based on where it started, right? Because the futures have been open for hours longer. 8 hours, 9 hours longer. Well, Brenda, to put it bluntly, you were wrong. You thought wrong. Not trying to be mean, just, yeah, I know that's not a common misconception. I'm sure at some point I probably thought the same thing before I understood what it was. I know I wasn't trying to be. I was mostly playing. But no, I mean, we all have that, just like when I was 8 or 9 years old. I said to my dad, doesn't make any sense that, I mean, if it's 90 degrees here, it should be 400 degrees in the air because I didn't understand um, the atmosphere and how the atmosphere works. It's freezing. You go up in an airplane, it's negative 30 degrees, whatever it is. You're 30,000 feet in the air, but if it's closer to the sun, as an 8 or 9-year-old, I thought that the closer to the sun you get, the hotter it is. Because in an 8 or 9-year-old minds, that's logical, right? It makes sense. And it's funny, in the market, same thing. And I've done that a million times. It's like, well, this makes sense. And then, oh, okay. But it doesn't make sense to me because this doesn't add up. And then when you understand why there's the difference, then it's like, oh, okay. Once my dad explained the atmosphere to me, then it made sense. You know what I mean? So same thing. So again, I was mostly playing. I wasn't trying to be me. But yeah, it's so yeah. The Qs is based on the NASDAQ. So it's an ETF. So the Qs is a mutual fund. That's all it is. But it's what's called a closed-end fund, so it trades like a stock. So the Qs is nothing more than a compilation of all the NASDAQ stocks. All they do is manage it on a relative basis to what the NASDAQ is. They shift in doing this, but it trades like a stock. So the Qs is based on the NASDAQ. The Qs will follow the NASDAQ itself. Don't worry about the futures part. The futures are a whole different ballgame. The COMP or the COMPQ is the NASDAQ. The NQ is the futures for the NASDAQ, which can vary, as you can see, can vary pretty dramatically. It can be up or down, and the other one can be the opposite. They're based on the same stocks, but they trade differently because they're different instruments, right? It's like saying a car and a train are both modes of transportation, but they function differently. So, yeah. Clear as mud. I don't have time to go into Apple because I'm already 8 minutes over. So it just started a couple minutes late, but that would still put me 6 to 7 minutes over. So anyway, I got to run. But good. You learned something new today, Brenda. Something that is good to know. And I'm sure you're not the only one here. So, and that's what it's all about. That's why we do this, right? To come in and so you pick up new stuff and you understand things better so you can become, so you can get that edge, that little bit. So yeah, it's all right here, really. So, all right. Appreciate y'all coming out, hanging out, having some fun. You're welcome, Kevin. If I don't see you beforehand, y'all have a Merry Christmas. It's only 12 days away, so probably won't. So have a Merry Christmas and a Happy New Year, and we'll see you down the road. Take care. God bless. Bye-bye.